Hello, traders. My name is Jubanks, and today we are going to dive into the fundamental concepts that drive price movements in the Forex markets and other financial markets. Understanding price action, filled and unfilled orders, and the dynamics of supply and demand, which is crucial for making informed trading decisions. We will explore how these concepts relate to support and resistance levels and how they can help you better navigate the markets. As I share this valuable information with you, I want to acknowledge that it is not just about giving back to the community, it's also about reinforcing my own knowledge and understanding. By sharing these concepts openly, I am able to solidify my own grasp of the material, and I hope that it will do same for you. In an industry where knowledge is often guarded closely, I'm committed to sharing insights that can help others grow and succeed as traders. So let's get started in today's journey to better understand the intricacies of price movements and market dynamics. In the introduction, we'll be talking about filled and unfilled orders being the first point, the second being price as a whole, understanding how price movements occur on the forex market or in the financial market. So let's begin with the first point. Now, filled and unfilled orders. Whenever we hear filled orders, what comes to mind? And whenever we hear unfilled orders, what also comes to mind? Now, by definition, a filled order is an order that has been executed at a specific price or better. This means that the trade has been completed and the buyer or seller has received the securities or assets they requested. What this literally means is that when you say filled orders, they are mainly or they are basically the chart prints that you see on your platform, right? So, for example, on the charts, let's move on to the charts and yes. So when they say filled orders, these are basically what they mean. See all these candlesticks you see on here is basically what is referred to as filled orders. These orders are completed, hence the candlesticks, and hence their name, filled orders. So anytime you hear people talking about filled orders, this is literally what they mean: the completed execution or the completed transaction. The charts on here are what is referred to as filled orders, right? So, for example, let's say at this price, let's say you bought a GBP card at exactly this price, let's say 1.85717, right? That is the price that you really want to buy GBP card, right? So for your order to be filled, let's say at this you wanted to buy here when price was somewhere around here, right? You wanted to buy down here when price was around here. Your order won't be filled until price drop down to exactly this price that you want to buy. And until it gets there, the order is not filled. As soon as it gets there, you get filled, right? You get filled. Or let's say you want to execute a trade at this, you want to buy from here, and then you place an instant order, right? As soon as you place that instant order, you get filled here. You getting filled is that now means that now you are buying or you bought an amount of GBP card which you intend to make profit of off of the price movements, right? So you want to buy here, and then when it reaches this price level, you make a profit off of it. So yes, literally what it means is that the charts are what is referred to as um, the filled orders. Now, for unfilled orders, an unfilled order, also known as an open order or pending order, is an order that has not yet been executed. This can happen for various reasons, such as the market price has not reached the specific price you want to buy the asset, or there is not enough liquidity in the market to fill the order, or the order is conditional and the conditions have not been met, right? So literally, when they say unfilled orders on the chart, this is what it means. It means that, let's say, so they have different types of unfilled orders, but let me just give you the literal explanation to what unfilled orders are. So they are orders that have not yet been executed. So either you want to buy at a higher, for instance, let's say price is here, exactly here at this point here, and then you do not want to enter a buy position here, right? So you put up a limit order or a pending order, right? At, let's say, beneath here, right here. You put a pending order beneath here that should the price come back to this low, you want to buy from here, right? So you placing that pending order here, you are not yet filled. So those are what we call unfilled orders. Any uh, pending order that you put on your chart which doesn't get filled at the moment, or which doesn't get filled within days to come, are what are unfilled orders. So literally speaking, what I mean, or what people mean by unfilled orders, are orders that are not yet executed. Those are unfilled orders. And in trading, you will want to put much emphasis on understanding what filled and unfilled orders are, especially the unfilled orders, because those are the footprints, or the areas where there could be a lot of orders that you can follow to make massive profits, because you would always want to be in the direction of the trend, and also in the direction of the big boys. When I say big boys, the big institutions, the big banks, I mean those that move the market. You'd always want to be in their direction in order to make profits, because as a retail trader you can never go against them and then expect to make profit, right? So finding where these unfilled orders are or are lying on the chart is really important as retail traders if you really want to become profitable and make profits off of this industry. So it is very important that, as I said, you take close attention to uh, where unfilled orders lie, because that's where you make massive profits. So now that we understand what filled and unfilled orders are, let's talk about types of unfilled orders. So for the types of unfilled orders, we have what we call limit orders, and we have stop orders. And so when we see limit orders, this is what we literally mean. So let's say market is in a bullish phase or in an uptrend, right? So we have low right here, we have a high, we have a higher low, we have a higher high, we have a higher low, we have a higher high, right? And um, the bullish markets uh, consist of higher highs and higher lows, right? And let's say this is the trend of the market, and you want to put a limit order. What limit order literally means is that you want to place an unfilled order at a place below or above the current price. That has to do with the kind of market that you are in. So let's say for the bullish phase, when you're in a bullish market, your pending orders, or sorry, your limit orders is supposed to be below um, the current price. So what I'm literally saying is that when you hear limit orders, they are orders that are placed to execute uh, a trade in the opposite direction of the trend, right? So let's say you are right. This is the phase of the market. I want to put a limit order in a bullish phase. Then you have to get your your limits tool, your limit order tool. Then you place it below, right? So normally in a bullish market, you want to buy low and sell high, right? Yes. So basically, you want to buy low and sell high. So your limit order should, if current price is right here, your limit order is supposed to be beneath current uh, price in a bullish market. So you can put your limit orders anywhere below this current price, right? So if let's say current price is here, current price is right here, here, your limit order can only be your limit order can only be below this line. So let's say here, your limit order is right here. What it means is that if what you are saying is that you want to enter this market or you want to buy this market when the market reverses from this current price, taps here, you this is exactly where you want to enter the market. So when the market gets there, and it's what fills your order in and then it moves in that direction, right? In that direction. So this green line is what is termed limit order in a bullish phase. And the reverse is for the bearish market. So in the bearish market, you have a high, you have a low, you have a lower high, you have a lower low, lower high, lower low, right? Right. So this is for bearish markets. So for a bearish market, your limit order is supposed to be above current price, right? So let's say if here is the current price of the market, your limit orders can be anywhere above this current price. So from here to the upwards, to the upside, that's where you can put your limit orders, right? So your limit order can be, let's say here, you can put a limit order right here, expecting that when price should reverse back into this level, you want to get filled, you want your trade to be executed as a sell for the market to dip down more further. So this is basically what it means when they say limit orders. These are limit orders. Limit orders. Now let's clear the charts and move on to stop orders, which is the second uh, type of unfilled orders. Right. For the purpose of this video, we just use these drawings, which is the trend lines for we use them for the stop orders also. Right. So for stop orders, they are orders to buy or sell when price reaches a certain level in the same direction of the trend, right? So those are stop orders. You put stop orders at places where when the market gets to, it executes the trade in that same direction. So for instance, this bullish market, right? This bullish market right here, this one. If you want to put a stop order, the current market price is right here. Stop orders are supposed to be above um, current prices for bullish and then below current prices for bearish markets. So you want to put a stop order here. What it means is that you want to put the order anywhere above current price, right? So it could be here, it could be here, it could be here, it could be here, or higher. So let's say you put a stop order here. What it means is that when when the market should continue to move from this current price, let's say it retraces and gets here onto this. This is where you want to be executed. This is where you want to enter the trade. So as soon as it gets on this particular level, you are going to be executed for a buy trade. For a buy trade. When it gets here, stop orders are always in the same direction as the trend. So if the market trend is bullish, as you are forming higher highs and higher lows, sorry, as you are forming, yes, higher highs and higher lows, when it gets here, which is a price above current price, you should initiate a buy setup for you, which may or may not continue the trend. That's based on your analysis, right? So that's same for bearish markets. So let's say your price Your current price level is right here, and you want to enter a stop order for sell. What it literally means is that you want to put your order anywhere below current price for bearish market. So it could be here, it could be here or lower. So let's say you put your stop order right here. What it means is that you are telling the market is that what it means is that you are instructing the market to execute your trade right when it gets to this level. So at this level you will be filled. You will be filled at this level right there. So literally, that is what stop orders are. So that's basically what filled and unfilled orders are. And I hope you enjoyed it.